Welcome back to the Dividend Diplomats YouTube channel, everybody. You got Lanny over here, you got Bert. We are the Dividend Diplomats.
Smash that subscribe button. Give Bert and I a nice blue thumbs up. I know it may not be blue. It's blue?
It looks blue to me.
Let's go, baby. This is the Dividend Diplomats, and we're talking to you about 2 monthly dividend stocks. Right now, we're putting them in the ring to see which one's the better one.
Yeah, for all of our new subscribers and our new followers, every once in a while we pit 2 companies up against each other, put them in the Dividend Diplomats wrestling ring. We're going to work on getting that there. And we show which company performs better by putting their metrics head to head against one another.
All the fans out there, this is for the millions and millions of dividend investors and hopefully dividend subscribers soon to be on this channel. We heard you loud and clear. You wanted us to look at 2 monthly dividend stocks and to see which one is the better one to buy, or maybe you buy both. And we found the 2 that we wanted to put in the ring that are in the similar type of industry, and they're both in the real estate investment trust or REIT industry.
Yeah, a lot of people have been asking about what monthly dividend paying stocks are out there, because most companies typically pay their dividend on a quarterly basis, so you will get a check from them once every 3 months. However, there is a population of these companies that will pay you monthly throughout the year. So yeah, if you're a dividend investor, who wouldn't want to get that check monthly?
We came out with a video a long time ago about being a landlord without being a landlord, with a dividend stock called Realty Income, which is ticker symbol O.
Yeah, and the other company we're going to be talking about today is STAG Industrial, ticker symbol STAG, S-T-A-G.
Now, Realty Income, Bert, what type of properties do they have? What are some of their top tenants?
Yeah, so they are obviously not industrial like STAG. Some of their top tenants include your Walgreens, your 7-Elevens, Dollar General, FedEx, a lot of your fitnesses, movie theaters. So they work a lot more on those standalone properties or some of those outdoor developments that you will see as you're driving down the main streets in your city. And what about STAG, Lanny?
Now, STAG, which sounds like a deodorant name, STAG is really, when they think of big tenants, think of big industrial warehouses, places that they can store equipment, create equipment, huge warehouse and industrial buildings. Westrock, which is ticker symbol WRK.
We both own Westrock.
We do. Big industrial places that can hold inventory, make things, machinery, huge places that are being, leased out. And, as similar to Realty Income, they collect monthly lease and rent checks from their tenants.
So it sounds like STAG probably warehouses a lot of the items that get sent to the tenants of Realty Income.
Now the question is how do they perform through the Dividend Diplomat stock screener? Now, typically we look at the price to earnings ratio as our first metric.
But Lanny?
But because they are a REIT, a real estate investment trust, you have to look at them a little bit differently. By their law, from how they are set up as an entity, they actually have to pay out most of their earnings as form of dividends or distributions.
For this reason, they are going to have a very high dividend payout ratio because it's required. The sector, though, uses a different metric instead of EPS to use when comparing REITs. It's called funds from operations, or FFO. So if you're going to be investing in REITs, you better get familiar with this term.
So instead of looking at the earnings per share, we're going to replace that with the funds from operations per share. So that'll show you the undervaluation or overvaluation of these stocks that we're about to talk about.
So now the 3 metrics that we're going to talk through in this dividend battle royale are the price to FFO ratio, the dividend payout ratio, which will have FFO in the denominator instead of earnings per share, and the dividend histories for the companies, and then we'll look at the dividend yields to compare against each other.
So we're not going to wait. We're going to jump right in to look at that first metric on these 2 monthly dividend stock. So Bert, for the first dividend stock being Realty Income, what are they currently trading at, and what does that FFO look like?
Yeah, at the time we're filming this video, they're trading at just under $60 per share. That annualized FFO is $3.31 per share. Therefore, they have that price to FFO ratio of just over 18. What about STAG, Lanny?
So STAG, which again, that name cracks me up continuously, they trade at just over $30 per share, and yet their FFO annualized right now is about $1.91. So the FFO ratio, the valuation here, we're looking at about 15.9 times.
It looks like STAG the deodorant beats out Realty Income here.
STAG. Just when you need a, yes, yeah, think about that,
Yeah.
like that name. So the second dividend metric, well, first, actually, before we get in, a 15.9 and an 18 does show signs of undervaluation in comparative to the market.
Yep, so that's fair. Both companies are trading below the market. STAG has the lower price per FFO ratio compared to Realty Income, but both pass that screener. So metric 2 here, that dividend payout ratio, Realty Income pays an annualized dividend of $2.81 per share. So you compare that to that annualized FFO, and that gives you a payout ratio of 85%. What about STAG, Lanny?
Well, STAG has a dividend payout right now. They do 12 months per share per month. So that annualizes out to $1.44 in dividends. And actually their payout ratio is just over 75%. So STAG has a slightly lower payout ratio than Realty Income.
Oh man, that's another one here. So STAG is coming out lower than Realty Income on the first two.
Now, one piece I want to make a mention, you might say, wow, again, you're gripping your seat. That's a high payout ratio. But as we said earlier, they're required to pay out those earnings in the form of dividends and distributions to you, the shareholder.
Fantastic point, Lanny. So let's move right into metric number 3 here, the dividend history. And this is where Realty Income has got to come out on top, because not too many REITs have earned the coveted title of dividend aristocrat.
They don't, Birdie.
No, Realty Income in 2020 announced 25 consecutive years of dividend increases, earning that title, which is a huge accomplishment for any company, let alone a real estate investment trust.
STAG has only 9 consecutive years. They actually started out as a quarterly dividend payer, and then they moved to monthly about 2.5 years into their public company existence. So they haven't even had the ability to be a dividend aristocrat. Give them another 16 years and let's see where they come.
You got to start somewhere. You aren't founded as a company increasing your dividend for 25 consecutive years.
I am excited for them to hit double digits in 2021 going to 2022. So that'll be nice.
Yeah, so let's compare the dividend growth histories. Realty Income's 5-year average dividend growth rate is 4.2%.
Man.
What about STAG?
Well, STAG's 5-year dividend growth rate on average is a blistering, a sweltering, a mind-numbing 1%.
Oh, so even below inflation
so
here.
Realty Income dominates. Does the Hogan leg drop? Does the clothesline from hell on STAG?
Yeah, so let's move into our fourth bonus metrics here, the dividend yield. Realty Income's current dividend yield at their stock price is 4.71%. So what about
Very good.
STAG?
Well, STAG's is actually a little bit better than 4.71. They're 4.74%.
Man.
But think about this. Realty Income has a dividend growth on average of 4.22% with the yield of 4.71. So they're almost at that 9% rounded dividend compounding factor.
Yeah, but interestingly here too, their dividend yields of these two companies are about the same. However, Realty Income's payout ratio is 85%, while STAG has a payout ratio of 75%. So maybe they could increase that dividend a little bit more than the 1% in the coming year and could really jump ahead of Realty Income there on the dividend yield front.
You know, typically it's actually funny. They only really increase their dividend by like 1/10 of a cent every year for STAG. Now, if STAG can just really get a little bit better there, they could actually get, you know, I personally, I'd want to see something higher than 1%. 1% is below inflation, so it's not even really keeping up there. So, you know, if I were to invest in STAG, it would have to be a little bit higher than 1%.
Yep, I would agree. So let's bring this home now that we've gone through all the metrics. Realty Income, their price per FFF ratio is just over 18. Their dividend payout ratio, 85%. They're a dividend aristocrat, increased their dividend for 25 consecutive years with a 5-year average dividend growth rate of 4.2%. And lastly, that dividend yield is 4.71%.
Now, STAG doesn't have the worst metrics, but their overall metrics here is the price to FFO, again, is just under 16 at 15.9. The payout ratio is better than Realty Income at 75%. That 5-year dividend growth rate is only 1% with 9 years of consecutively increasing. and they have a dividend yield of 4.74%.
Here's the big question is, which one of these companies come out on top? It's a very interesting question. I mean, I think Lanny did a great job earlier summarizing some of the things that we would want to see from STAG going forward. We want to see that dividend growth rate increase. We're excited to see them cross that 10-year thing. However, their valuation metrics are looking great. Right now, though, I think personally, Realty Income comes out on top. I love that 4.2% dividend growth rate and their just consecutive quarterly dividend increases that they offer shareholders.
I do like Realty better than STAG right now. STAG would really have to be discounted by 15 to 25% more from where they are for the yield and the dividend growth to really start making sense to me.
Yeah, so everyone, let us know what you think. Which company you think comes out on top? Is it Realty Income or is it STAG?
So we wanted to give you, though, 2 monthly dividend stocks, really show you 2 of them that are out there. Again, we try to at least make it similar industries and buildings and, kind of just give you some sort of familiar and similarities here.
And especially the big one for this one was monthly dividend stocks, because so many people have asked us to evaluate some monthly dividend paying companies.
So yeah, again, leave all your feedback in the comments below. Subscribe to our channel if you haven't. Like the video if you watched and made it to the end. Again, this is Bert and Lanny from the Dividend Diplomats.
Over and out.